Internet computer is holding its ground while the broader crypto market sways. Could we be on the brink of a major bullish surge? Meanwhile, Bitcoin just broke out of a key level, and there's a lot more at play than just ETF. Want to know what's really fueling these moves and how you can capitalize on them? Stick around, because today's video is packed with insights you don't want to miss. If you're new here, make sure to hit that subscribe button to stay updated with all the latest in cryptocurrency analysis, price predictions, and market trends. Today's episode is packed with actionable information. First, we'll break down why Internet Computer has managed to hold firm while the rest of the market has wavered. We'll explore the technicals behind its current price movement and what traders should look out for in the coming days. After that, we'll switch gears and talk about Bitcoin. It surged 4% in less than 24 hours and whether that momentum can continue. Stick around until the end because we've got some crucial insights that could help you navigate these markets, plus important updates on spot Bitcoin ETFs and how they're influencing the broader crypto landscape. In a sea of volatility, ICP has managed to surge by 3% over the past 24 hours, trading at around $8.10 at the time of recording. Now, that might not seem like a huge movement compared to the explosive gains we've seen in some other altcoins in the past, but in the current market environment, ICP's steady climb is worth noting. Most importantly, it's respecting a key trend line that was identified months ago, back in August. When we look at the weekly chart, we can see something interesting. ICP has been forming higher lows over the past few weeks. This is usually a strong signal that an uptrend is taking shape. In a volatile market like crypto, higher lows suggest that buyers are stepping in whenever the price dips, creating a support zone that helps to stabilize the price and prevent major sell-offs. But there's more. Even though ICP has been forming some lower highs indicating resistance from sellers, the number of higher lows far outweighs the lower highs. This pattern of higher lows suggests that the buying pressure is building up. It's almost like the market is coiling, getting ready to break out. The key level to watch here is $9.51. According to a recent analysis shared on X, formerly Twitter, if ICP breaks through this resistance level with strong volume and manages to close the week above it, we could be looking at a major bullish breakout. And why is this level so crucial? Well, it represents the upper boundary of a long-term resistance zone. If ICP can push past it, there's a good chance we'll see some significant upside. For traders, this could be a perfect entry point, provided we get confirmation through volume and price action. Remember, though, that crypto markets are highly unpredictable, and while a breakout seems likely, we should always be cautious of false signals. Now, technicals are just one piece of the puzzle. Another reason ICP has been able to hold its ground is the project's growing adoption. The number of wallets holding 100 or more ICP has reached an all-time high, with over 47,126 such wallets currently in existence. This steady increase in holders signals something important. Long-term investors are accumulating ICP, showing faith in its future potential. We all know that in the crypto space, investor confidence plays a massive role. When people are willing to hold onto their assets for the long term, it creates a solid foundation for price stability. That's exactly what's happening with ICP right now. Despite market fluctuations, more and more wallets are holding ICP, indicating strong conviction among investors. But this raises an interesting question: what's driving this growing confidence? Well, it's largely the project's innovative technology and the unique value it brings to the table. If you combine this long-term vision with the current technical setup, you can see why so many are bullish on ICP's future. It's one of those projects that has both the fundamental and technical backing to potentially see a strong upward movement in the coming months. Now, let's talk about the elephant in the room, Bitcoin. Over the past 2 days, Bitcoin has risen by around 4%, retesting the $65,200 level. This sharp price movement has a lot of people asking, what's going on with Bitcoin? To answer that, we need to look at a few key factors that have contributed to this price surge. One of the immediate reasons behind Bitcoin's price increase is the inflows into spot Bitcoin ETFs. On October 23, $192 million flowed into these ETFs, reversing the outflows we saw just the day before. And here's where things get even more interesting. These inflows were almost entirely driven by BlackRock's iShares IBIT, one of the largest Bitcoin ETFs on the market. BlackRock has been a massive player in the traditional finance world, and their involvement in Bitcoin is no small thing. When an institution like BlackRock starts accumulating Bitcoin through its ETF, it signals to the broader market that institutional investors are bullish on the asset. This influx of institutional money tends to drive prices up because it shows a growing acceptance of Bitcoin as a legitimate investment vehicle. On top of that, we also saw a net outflow of $124 million from other Bitcoin ETFs like Bitwise's BIP and ARK's ARKB. This might seem like a negative signal at first glance, but what's really happening is that investors are consolidating their positions into more established funds like BlackRock's. This shift reflects a broader trend in the market where institutional players are looking for safer, more regulated ways to invest in Bitcoin. Let's take a closer look at what's been happening in the traditional markets. Several major tech companies have reported strong earnings, leading to a rally in tech stocks. Nvidia, for example, posted record quarterly profits thanks to its growing demand for memory chips in the artificial intelligence sector. Similarly, Tesla saw its stock rise by 17% after CEO Elon Musk projected that the company's revenue could grow by as much as 30% by 2025. Why does this matter for Bitcoin? Well, there's a long-standing correlation between Bitcoin and the broader stock market, especially tech stocks. In fact, throughout October, the 50-day correlation between Bitcoin and tech stocks has remained above 80%. This means that when tech stocks rally, Bitcoin often follows suit. The correlation might seem strange at first, but when you think about it, it makes sense. Both Bitcoin and tech stocks are considered riskier assets, and they tend to move in the same direction when investors are feeling optimistic about the future. So, as tech stocks rally, Bitcoin is benefiting from the same wave of investor confidence. Another factor that's boosting investor sentiment is the strong U.S. job market. Recent data from the Labor Department shows that the number of people filing for unemployment aid dropped by 15,000 in the week ending October 19. This decrease suggests that the job market is stronger than many analysts had predicted. At the same time, we've seen an increase in so-called continuing claims, which refers to people who are receiving benefits after their initial week of aid. One thing to keep in mind is that both Bitcoin and tech stocks benefit when there's more liquidity in the market. In periods of high liquidity, investors are more willing to take risks, and we tend to see assets like Bitcoin outperform. The current combination of strong earnings in the tech sector and positive job market data is creating an environment where liquidity is flowing into riskier assets like Bitcoin. If this trend continues, we could see Bitcoin push even higher in the coming weeks. While we've already discussed how ETF inflows are affecting the market right now, there's a much bigger event looming on the horizon: spot Bitcoin ETF approvals. The SEC has been delaying its decisions on several high-profile Bitcoin ETF applications, but many analysts believe that approval is just a matter of time. If and when the SEC finally approves a spot Bitcoin ETF, we could see a massive influx of institutional money into the market. This would likely lead to a sharp increase in Bitcoin's price, as demand would far outstrip supply. The market is already anticipating this, which is why we're seeing so much interest in Bitcoin ETFs even before they've been approved. For retail investors, this is a crucial moment to pay attention to. Once these ETFs go live, the opportunity to buy Bitcoin at lower prices may quickly disappear. If you've been considering getting into Bitcoin, now might be the time to start building your position. To wrap things up, Internet Computer is holding steady at a key trend line, with the potential for a bullish breakout if it can breach the $9.51 level. Meanwhile, Bitcoin's price surge is being driven by a combination of ETF inflows, tech stock rallies, and a strong macroeconomic backdrop. The next few weeks will be crucial for both assets, as we await further developments in the spot Bitcoin ETF saga and watch for key technical breakouts. Thank you so much for tuning in to today's episode. If you found this video helpful, I'd really appreciate it if you could like, comment, and subscribe. Your support helps the channel grow and keeps us motivated to bring you the best crypto content out there. And before you go, make sure to check out our other videos for more insights and analysis. Until next time, stay informed and stay safe in the markets.